Ladies and gentlemen, it is 3:14 p.m. Eastern Time on 10/13/2023. We are talking about a heavy move today. We are looking at the S&P 500 right now, and a lot of volatility. Seeing some popping right now. I'm pretty heavy on the short side, just full disclaimer there. I do have a little bit of call action on. I've got three debit spreads, 442, 443, just in case. It's nothing. It's not going to happen. It's not going to hit. It probably expire worthless. More likely, the market just chops, and we get nothing. So that's that. We've got quite a bit of puts: the 422 to 421, 426 to 425. 424 to 423, and then we've got an LMT call as well, which is Lockheed Martin. So we had a crazy day. We're positioned for some movement, and why are we bearish is the question. Well, we had quite a series of weakness from December of 2021 to pretty much the breaking point of a lower high. It started initially, I guess you could say, on December of 2022, so essentially a year later, which is interesting. And then another higher high there in February, start of February. And then, of course, we saw the continued chop higher up to 460 here on the SPY, the ETF. And now we're starting to see some of that similar behavior that we had, where they're putting lower highs in and lower lows. Forget about the trend line, touching properly. Just pay attention to the direction of the lower highs and lower lows, right here, right here, right here, right here, and here. Lower lows, lower highs. It's so simple to see this trend in retrospect. But the difficult part is picking it up in real time, which is what we're trying to do. We're seeing, again, lower high compared to this thing. This is a massive lower high. That's huge. Then we start to see a series of them come back in. So we had a 2-day breakdown coming in on the S&P 500. Let's look at the futures real quick, just to get an idea. Let's just look at the continuous. Look at the weakness here on the monthly basis of just this last month, September, October. It's just been rough. It's been lower highs, lower lows, and that's what we've been dealing with. So I think in that context, when we really look at where we've been over the past couple of years, frankly, we are starting to see some lower highs. And one thing that kind of interesting about the S&P dropping down today is, first of all, it started strong. I accidentally deleted that bar. Remove all trend lines, remove. How do I reset? Remove all commentaries. I accidentally deleted one of these bars. The only way to really fix that is undo. Just delete the chart. Forget about it. You can see it started off strong today, right? This is daily line, this dotted line, vertical. You started off strong. You busted through the overnight highs, 8 o'clock, 9 o'clock. You know why? That was the earnings. Earnings from banks came in. And, can we see the volatility by next week when we're really calling for it? By the 16th, frankly, is what we're looking at. It's pretty aggressive. We'll have to act quick. Hopefully we get a nice drop in the open. Otherwise, if it pops again like it has been doing, we might have to sell into the open. But if it's just an all-out week overnight, then we could be looking at some massive profits on Monday. We'll at 9:30 open. We'd like to see a good close at near the lows today to really drive home the conditions of weakness. Otherwise, we'll see that chop and pop higher if they can't close on the lows today. Might just be a chop session, couple next sessions. It's very possible. TNX is the 10-year Treasury. We're going to look at that right now. Look at this thing just chopping it up today, sideways. Huge gap lower and then chop. So the yields dropped, and stocks still, after that gap, yields kind of rallied yesterday into the close, and then the market dropped, and now the yield's kind of chopped up today. And essentially, we're looking at a huge pop for the U.S. session, and then chop today. So again, the S&Ps pretty much said, hey, we don't give a damn about the interest rates today. We want to take out yesterday's low. Treasury yields didn't do that. I wish I could show you that. Let me just close this chart and open a new one. You could see the option chain I was looking at. Basically trading these 426 puts, buying and selling right here on this expiration. So buying the 48 cents, selling the 36 pretty much is what I'm doing there. I'm not doing on this. I'm doing on a Robinhood, no commission, so that's good. As far as are we going to make a ton of money today? Probably not. I mean, I'd like to see the market get smashed into the close, yeah. But the reality is it's probably already seen its volatility for the day. Now, one of the reasons that I started buying some LMT, you can see that bar is back finally. I bought LMT because, frankly, I saw a headline that was concerning about Hamas and all that jazz and Israel. It's a nightmare completely, just terrible overall. I don't even, it's just a nightmare. The people that got this ball rolling, just complete morons. People that shot up the festival, complete morons. And now we've got to deal with this fallout because they have to essentially neutralize all threats around their border. And I think that's going to be a problem for overall stability across the world. If you take a look at a headline on Reuters that was there today, you just go to Reuters.com and you see something you don't want to see. It says, you see a lot of stuff you don't want to see. But it says Hezbollah says calls for it not to intervene in war will have no effect. So you can assume over the weekend, it is again Friday, you can assume over the weekend there's going to be some war between Israel and Gaza. You can assume that it's going to be nasty. And apparently we can assume that there's more parties going to be getting involved. So I got a little bit of a call play there on LMT, just one debit spread, 475, 480. It's nothing big. It was like a $30 position. It's up $10 or something, maybe. No, it's actually break even. So nothing big, but just want to map out my thoughts. Technically, it's a weak market. Fundamentally, rates are choppy and equities are weak, showing that they're just generally not optimistic. I think even stable rates could actually be a sign of weakness in the equities, just clearly from today. Even if the rates don't go necessarily to new record highs, which they probably will, even if they don't, they will probably, if they chop, impact equities to the downside. So I could be wrong. I have a little bit of a liability insurance with those 442, 443 debit spreads that expire on the 16th, so in 3 days. So it's Friday. They'll expire Monday at the close, so will the puts. So we need some volatility either way by the open on Monday, ideally. And I think that's possible, considering we are going into a weekend in which a war exists prominently. So I hate to make this video saying, hey, I think the market's going lower because of a war between some Muslims and Jews, but that's pretty much what this video is saying. I think defense stocks could do really well. I think that's obvious. I think LMT and Boeing, have some potential to get some short squeezing out. If you're looking for a place to run, Boeing might be a place. I don't know. There's been a couple problems. This is not financial advice. I'm just talking about my concepts, educational, for better or for worse, as my funds are deployed. But Boeing's here 184.87. I think that's probably a tip the toe in the water type thing. LMT here at 441.78. I think, again, we're looking at a situation where nobody really is happy. You can't even see this chart right now. Nobody's happy about anything. People are pissed off that there's a war occurring. I'm pissed off there's a war. These people are dying for no reason. It's just complete terrible overall for everybody. For 184.89, it's because mainly a couple idiots shot up a festival, and now 1,500 people basically attacked Israel, and now it's a fucking nightmare. So I think that we're going to see more of this nightmare activity play out. I would be shocked if equities could rally. If they do, that just goes to show how optimistic things are for the United States. I wouldn't be, I say I'd be shocked. It would make sense if they are going to buy any stocks. I would definitely be buying U.S. stocks as opposed to European, just because of the distance. But as far as overall optimism, there's really not much to be optimistic now. You've got massive wars in two fronts now. You've got Ukraine and Russia. You've got the United States basically supplying Ukraine. Then you've got Israel and Hamas, now possibly Hezbollah. And you've got the United States supplying Israel. So the United States is quietly trying to stay calm. And I know it's difficult because everybody's losing their mind and killing everybody. I think the United States stocks could be impacted negatively just by overall risk aversion to all equities. Possibly bonds are a safe place to be after these we get some stability here. So somebody just booked on my Airbnb, and